And also to mention interest rates, the Bank of Jamaica has been, didn't they just cut rates again? I think they have been gradually,
Yes.
them among other banks
0.25%.
across. So how much is it at now? It's 6.25?
Okay, I don't remember,
I
but
think it's
they just cut
6.25
rates
now.
this week.
Yeah. And they're among the other, like, other central banks across the world. So the equivalent to the Bank of Jamaica, but in other countries, in the US, the Europe, Canada, a lot of them are seeming to cut interest rates. So the interest rate is like, I think about it, it's like the interest rates or the core interest rate by the central bank of that country is almost like they're saying, hey, you can come here to the central bank, you can give us your money, and we will give you a very, 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 very low risk, almost guaranteed. It's almost, I mean, nothing in life, nothing is really guaranteed like when with relates, I guess, an investment, but it's as close to guaranteed as usually possible, like the government of the country. You can get 6% return on your investment. So if you put in $100, you get $6 back. And then, these banks and stuff are doing it with a large amounts of money. So it's like, if they can get an almost guaranteed rate of 6% by lending it to the central bank, then why would I lend it to this guy to do his startup when the startup could fail? Yeah, I could get 100% return, but I could get a 0% return and lose all my money, versus here I can get a almost guaranteed 6%. So it's like, hey, I'm not gonna lend out to the business, to the people who want to buy cars, buy a house, or I'm not gonna lend to them without getting charging more.
Mm-hmm.
So it's really, that's how the interest rate is controlled. Like, so if the core rate set by the central bank is 6%, it's almost like the banks could then, if say they raise it, the Bank of Jamaica raises it from the 6% to say 10%, it's like, it means all the rates usually will get raised very fast. And then if they reduce it, I mean, the rates usually don't get dropped as fast. So they'll say, if the Bank of Jamaica says, yeah, we're going from 6% to 10%, your rate, if you had a loan, a car loan, a mortgage, it goes up a lot faster. But then when the bank is dropping it, it's not going to just drop down suddenly. Your rate may actually stay the same for a while. And then there'll be almost like a little game of, okay, which bank is going to drop rates first? And then, if that person drops rates, it's like, wait, if I could go to them and borrow the money from them at a better rate and then pay off my car loan from, say, Scotiabank. Like, maybe NCB is now giving me a better rate. So I'll do that, and then that will then put pressure on, I guess, Scotia, because they're like, oh no, I don't want to lose the loan because I'm making money from it. I'll give you a better rate. So interest rates seem to be going down. I mean, it's going on pretty slowly, but generally it can be better for a bank because, especially I guess the point I mentioned that, hey, when the rate has gone up, they don't usually drop it down as fast.
Mm-hmm.
So it's like, they are getting money. Say rates were to go down to 5%. So it's almost like they're borrowing money at 5%, but then they're lending out the money at 15%. Then, they can get like a nice spread on that. But yeah, like if interest rates go down, which will generally mean that eventually loan rates should go down, then that means more people may want to go to the bank to get loans. So they'll say, hey, I want to get a car loan now because getting a car is essentially cheaper now. Or I want to buy a house now because getting a house is cheaper. So then that can mean more business for that bank. So if the interest rates continue to go down, we may see more loans from these businesses, or more loans. The banks are able to get more loans because people are coming to them saying, yo, I want to borrow money. I want to make, yeah. So that's something, I guess, to look at too, to see how interest rates continue to trend. And we did mention, I guess, a bit about like the whole reinsurance and about risk-good insurance and storms. And something that I wanted to touch on, there was this I don't know if you saw this article about the Bank of Jamaica is working on this thing called a bank switch tool. A bank switching
Okay.
tool where it's like the Bank of Jamaica will have a central database that will store what they call KYC, which is know your customer. So that it's supposed to make it easier for us to be able to switch between our bank. So it's like, now it's kind of hard. Like, if, people know that it takes a lot of time sometimes to set up a bank account some places. You have to physically go into branch for some places. You can spend hours. But what I understood was that the Bank of Jamaica is saying, hey, if we have a central database that has your data, then essentially, say you have an NCB account and you don't like NCB service, you like Scotia service or you like Sagicor service, but then you're worried about the time it may take to set up a Sagicor bank account, so that's why you don't want to switch to Sagicor. But what if it was very easy to switch to Sagicor, because Sagicor could just get your data through the Bank of Jamaica once you approve it, and it could just send over the data and bam, you get an account really quick. That was my understanding, that that's their goal, so that it would make it more competitive. So it's like, I guess we're talking about the example of the loan. So suppose I'm guessing that it probably would make it easier with that process too. So suppose you have a car loan and the rate is 10% and NCB is giving you that, but Scotia say, yo, we can give you a 7% loan. But then before the bank switch tool, it would have been hard to get that account, or that would have been like another factor to make you less likely to switch. But now, if you can quickly switch over the loan, you'll be like, hey, I'll do that. So then what I was seeing was that the Bank of Jamaica wanted that, because that would mean that it would allow the Bank of Jamaica, to have better control over the economy, essentially, like interest rates. So it's like, what they were saying was that, say the Bank of Jamaica increases interest rates from 5% to 8%. What they want is that means they want all the other banks to raise their interest rates. But the banks don't necessarily have to. But then if you had more competition where people could just easily switch the bank, it's like that could make the Bank of Jamaica's what the effects that they want on the economy happen much faster. That's their hope that I saw. So what they were saying was that there was like a timeline on that. At the time they announced it, this was May 2024. They were saying it could take 18 to 24 months. So that's 2 years. I mean, maybe even 3 years. I don't know. But that could be something to look out to, because if NCB and other banks aren't careful, I think it could be nice, I guess, for us as the consumer or the customer, because then that could be more competition, which could mean better prices for us and better service. But yeah, I saw that. And some
I
of the
wonder
plans
if NIDS would help with that.
The National Identification System thing.
Yeah,
Did
to
you
make
get
all
yours?
of those things easy. I'm not gonna get one, right? The only way I get one of those cards is if I understand how secure my data is. I don't see why, after so many data breaches and all of these things, just generally in Jamaica, I should now just trust the government. That's just me still. So if they can answer,
what's
how
the
is the
benefit?
data being...
What's supposed to be the benefit for you as a, like, why should
I'm actually not sure. I think you wouldn't need like a JP for certain things and getting through. So I guess it would help with, all of these kind of stuff in terms of, your identification is, XYZ. But I feel like they also collect like biometric data, your fingerprints and stuff like that. And as much as
very secure.
Yeah, that needs to be extremely secure. I saw a guy on Twitter post a lot of questions asking about, how secure is it? Is the data stored on a cloud or locally? If it's locally, how? Like, can anybody just walk in and just access it, or steal like the go in the server room and take I think there needs to be some level of transparency with how they're storing the data. But that's just me personally. I mean, other people have gotten the card and so on, and kudos to them. They're less paranoid than I am, which is great, but I just have trust issues, man. I just have trust issues. But yeah.